Look on the multiple listing service. You can do a lot of this on Zillow, Realtor.com as well. I'm going to show you some of the searches that I use. So let's go to Ventura, California. Okay. And we're going to zoom in to specifically that neighborhood. The biggest mistake people make when they look at comparable sales is they start walking too far. They don't sort of respect staying within the boundaries of where the neighborhood is they're looking at.
Well, maybe it's not really my confession. It's a confession that Zillow should be making. I believe that companies like Zillow, with their instant offer programs, Redfin now, and companies like OpenDoor are doing two things. And they're two things that you should know about because they're things that would make you a lot of money to know. In case you don't know, these companies make money by buying real estate and simplifying the real estate buying process by basically offering a certain amount of money in cash for any kind of property, any condition, and they'll buy it there. But I specifically want to touch on Zillow. See, Zillow recently released their earnings report, and the earnings did so well, broke expectations, broke records, that their stock went up over 11% almost instantly. And remember, the point of this video is to tell you about these two problems that comes out of this. Before we really hit that problem though, let's understand this. From a stock market point of view, Zillow could be an interesting play. Mostly, it could be going to turn Zillow offers into an extremely profitable business. Now, according to their last financial report, Zillow offers isn't that profitable yet. It's not necessarily because the properties are selling for a loss. It appears to be, going through their financial report and just giving you the bottom lines, that they're spending a lot of time and money on infrastructure and really advertising, getting the word out on the existence of this instant offers program. So I understand that. But Zillow wouldn't be doing this if they didn't have a long-run game plan to make a lot of money from this. And we already know, based on the deals they're getting, that there is a lot of money to be made. In fact, the Wall Street Journal has been researching Zillow pretty dramatically lately, and there have been a lot of articles out about Zillow and these sort of iBuyer programs. In case you don't know, iBuyer programs are programs where basically companies come in and they use algorithms and technology to make offers on real estate, and then they buy those deals cash quickly done. Much like I described for this Zillow Instant Offers program. So we know they're using algorithms, we know they're using technology, we know they're going into these cheap houses, we know they're breaking and beating records, they're breaking expectations in the stock market. A lot of things are going very, very well for Zillow right now, which explains why we have competition from Redfin, why we have competition from OpenDoor, and why it seems like every week there is a new iBuyer program. But what are those two big problems that you should be fully aware of that I need to get out before I freeze? Because it might not look cold, but the feels like temperature is 14, and I am not dressed for 14. Oh, I should have put my gloves on. Oh, wait, do I have gloves? Oh, I have gloves. And they have that choice. And there's no harm. Like, you can't blame Zillow for saying, well, we made a $420,000 net offer and they decided to take it. It's their problem if they left a bunch of money on the table. That is true. But what's the second problem with the iBuyer programs? And this is the one that, if you fully understand, is going to make you a lot of money. All right, let's throw this. Ready? The second problem with the iBuyer programs is they eliminate your ability from getting into wedge deals. See that property that's probably not made it this far in the video, but you could just go buy Zillow stock. Although I personally am not a big fan of Zillow stock because I used to be a Zillow Premier agent, and I'll tell you, and I'm not trying to bag on Zillow, like, this was just my opinion, it's just the experience I had. The customer service sucked. Hey, quick update for you. So I'm coming to you from the inside of this hotel room. Anyway, there's a Wall Street Journal article that just came out that suggests that iBuyer programs operate on relatively thin margins. That is, the article says maybe these iBuyer programs are not a ripoff, but I still disagree. Here's why. The problem is they used title insurance data. Hang a little coming soon sign underneath that and throw it up on Zillow or Redfin as a coming soon listing. And guess who now is the only person who happens to have keys to the property while still exposing the property to the public? Moi. which increases the odds of me being able to represent both a buyer and seller, which usually the buyers and sellers like because maybe they can save like 0.5% of a commission or a tiny little bit of a discount. And I love it because I get paid much more. And I
Now, I do also have a tiny exposure to Zillow stock. I'm not the biggest fan of Zillow. I've never loved their customer service. I haven't really loved the system and the way they sell. Not super jazzed about the company. And right now, I'm certainly not going to add anything to my Zillow position because Zillow makes, well, they're trying to at least make a lot of money off their standing inventory of houses and flips that they buy, fix up, and sell. Well, right now is not the time to be flipping or speculating in real estate. I don't He's for sale by owning over $40 million worth of real estate here. These are the Zillow pictures. I'll show you some more in just a moment, but these are the pictures that we have on Zillow. Zillow has, by the way, confirmed the authenticity of these listings. I have also confirmed the deeds on these properties, and I could see exactly the way Elon is holding title. He's holding it in a trust. Talk about that regularly in my management course. And then he did also quit from that trust his title into an LLC. More photos on the multiple listing service than it does on Zillow, but there aren't any pictures of the inside of it. Now, it seems like the property is dated. It was dated when Elon bought it, and Elon has a condition that whoever buys this property needs to keep it in its same charming state, which is really just a red flag that it's dated and kind of needs to be fixed up a little bit. In fact, this was the MLS description from the last time it was on the market. Tremendous opportunity to develop a view property on this acre promontory. Zillow Group, and partially because I think Zillow's really smart in that they also advertise and help landlords and tenants where Redfin does not work with tenants and landlords, though Redfin could easily integrate that in the future. So
what I'm really looking for here is like, hey, I know you're not profitable. Are you scaling, and how? Some dominoes are definitely going to have to fall into place for Zillow, but you know what? For if you can get in this stock $40, $45 on the right day and, you know, hold it for 5 years, there's an amazing opportunity here. You have to believe, though, in real estate going, let's just say 65, 70% digital, right? If you don't believe in that, then I wouldn't buy Zillow. If you see that future, though, I would consider jumping in. All right.
Seems to be more of an effort to beat out OpenDoor and Zillow Instant Offers and attract customers rather than trying to make it profitable. So I did some projections. And quick note, the pink in the spreadsheet that I'm about to show you represents data from their actual earnings report, and yellow represents projections that I'm working on 4 years out. So yeah, I'm taking Redfin 4 years out to try to do an analysis on this for the end of 2024. Sector. iBuyers are companies like Zillow, Redfin, and OpenDoor who will make you an offer on your house as is. Except that is much to the dismay of real estate investors like me who like to buy those fixer-uppers and flip them myself. So, this is what Chamath said this morning when he announced the deal. He said, here's the scoop about real estate. The federal government is reducing SALT tax benefits. That's when you can write off state and local taxes. And that is causing people to move to lower cost of living areas to have a higher quality of life margin. That's not good. I'm going to save you the boring chart for Zillow. But basically for Zillow, they spend 99.8%, which means they have a profit of 0.2% on their home flipping business. Those are not very good numbers, right? Like, these companies haven't figured out how to go profitable yet. And the reason is construction is hard. Flipping is hard. And I made a Redfin analysis video 2 days ago, and I said, I think Redfin is a buy because of the bullish on Redfin and Zillow. And let me show you exactly why. By the way, before I drop this hammer that I just discovered about OpenDoor, I really want to show you this quickly as well. I showed you the profit margins on Zillow and Redfin here, but I didn't mention that Zillow in the 6 months ending 2020 actually got revenue of $122.4. That's $1.2 billion. Down in 2019 to about 0.6%. That's probably because Zillow and Redfin really ramped up their competition. Basically, what's happening is when people want an offer from these, they just shop Zillow and Redfin and OpenDoor. And it makes sense because, like, why would you not shop it? Which squeezes the margins down even more. And these tech companies are willing to lose money, which is just like, it's painful. It's so painful. Now, in fairness, like, I invest in Redfin, so it's not like it could be that painful, but still, it's like these margins are horrible. So quick note before I go to the next slide, what I want you to do until it actually happens. But it tells us how to value Zillow, Redfin, and OpenDoor right here, baby. I can't believe I just said right here, baby. I'm sorry. Okay, 3.9%. And by 2023, they think they can get to 4.7%. Change on margin makes a huge change for Redfin, Zillow, and OpenDoor. That's what you got to pay attention to if you're investing in these companies. Folks, this projection by OpenDoor is literally right in line with what I thought Redfin was going to be. And we're going to see more and more, I think, of a bounce at Redfin and Zillow if these numbers hold true. If this S1 comes out bad and OpenDoor's financials don't end up proving to live up to snuff, it's going to be bad for Redfin and Zillow as well. But for right now, I'm increasing my holdings in Redfin and Zillow. less volume happening at companies like Zillow and Redfin because less people are selling homes, and yeah, services are weaker right now. Now, home prices are going up, but unfortunately that means Redfin and Zillow stocks are going to lag a little bit, which maybe does that create a buying opportunity to get in on Redfin and Zillow. I personally
trying to sell it. I don't know if they ever sold it or what, but I found it on Zillow, and they're still trying to sell this house.
Goes for Zillow. Zillow, who I'm infatuated with, but still haven't found a price that I would buy. 60% revenue growth. They get that scary little 40 that we don't exactly know what that means on the EPS side. And since they don't have a PE today, you can't really calculate the rate of return using these metrics. But I really like Zillow. I just wish that it wasn't $100. All right, now we're going in mid-sized market cap. Let's see who's at the top here. Paylocity. You have revenue growth of 35%, EPS growth of 25%. But
recommended first a few weeks ago. In after hours here, we've got Zillow up 10%.
Teladoc, we've already talked about. Zillow is another one on my list, and Zillow is one that I always struggle to buy at the $100 price mark. I don't know why I just don't buy it and put it away and not look at it, because that real estate world is ripe for disruption. And not even disruption as much as I would say digitization. And then last,
Trade Desk, Zillow, CRISPR Therapeutics, Invitae Corporations, Roku Square, Twilio, Tencent, Snap, LendingTree, Pinterest, Pure Storage, Slack, TransUnion, Facebook, Teladoc, Spotify, Fastly, Unity, DocuSign, NVIDIA, Cloudspace, Zoom, and many more. So, what do I think? We've got some pretty bold assertions here. We've got Michael Burry in 2009 saying that there's going to be an index fund bubble, and the longer it goes on, the worse it's going to be. Task force. We've got Zillow, Wayfair, Etsy kind of leading the run on some of these that we track. I don't track all the stocks out there, but these are some of the favorites that I track. So we'll be on standby here for these events to begin, and then we'll cover them as they happen, and we'll hop back and forth. The White House briefing room is on standby as well, so it'll be exciting to see what we hear, especially with cases. Now, these are great companies here, folks. Etsy, Neo, Zillow, wonderful companies. Okay, so it looks like we just got a speech put down on the podium here, so we will be on standby for the speech as well. EXPI, great company here as well. This to me is a good buy under 45. Under 50 even sometimes. Gap, I try to stay away from. Redfin's been beat up for a while. So if you're looking for some stocks, really, and even the pharmaceuticals, like even though Moderna, you're ready to do it. So that way you get an update on Zillow or Redfin, you're like, oh my gosh, that looks like a really good fixer-up or a really good multifamily deal. At least you've got the capacity to write an offer. It's not a bad idea. And look, yeah, no, I get it. Good deals might be far and few between, but this is exactly why you got to be ready to buy in real estate. So that way you could diversify out of stocks a little bit. And second, if you haven't gotten started, yeah, 215 shares of Tesla and 1 share of Zillow. But what's crazy is the cost. Yeah, actually, I think I only funded this one time. I think it was like $13,000 or something like that. Look at the cost. So there's about 13-ish thousand, a little under $13,000 in cost. And then compare that to the market value. Absolutely meteoric rise here. Thanks heavily, of course, due to Tesla. But look at that, 1,400% return on Apple stock instead of Tesla, and a tiny little bit of Zillow over here. Cost basis of 12 and 300, and you can see that's gone up in value. So what do we got over here? We've got gains on this one of $30,700. A lot of these are actually some older accounts, and it just really goes to show the whole like buy and hold principle of put your money where you've got some good conviction and just leave it.